Hi, I'm John Knobel, and this is TIO Markets. Today we're going to do an introduction into oscillators. Before we were able to get started, let's get through the legal stuff. Here's a quick disclaimer. The material is provided as a general marketing communication for informational purpose only and does not constitute investment advice or investment research. Nothing in this communication contains or should be considered as containing investment advice or an investment recommendation or a solicitation for the purpose of buying or selling a financial instrument. The content represented is the view of our experts on a generic basis and do not take into consideration an individual personal circumstances, investment experience, or current financial situation. All information provided is gathered from reputable sources, and any information contained is an indication of past performance, is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment in financial instruments is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced for further distribution without our written permission. My name is John Knobel. I'm a professional investor for the last 21 years. I started my career in New York as a financial advisor for Morgan Stanley. I qualified to manage commodity futures funds, commodity trading, and operate commodity pools by the U.S. National Futures Association. I'm also certified as a portfolio manager and investment advisor by the Cyprus Ministry of Finance. Oscillators. What is an oscillator? Momentum indicator. What is momentum? A momentum indicator is a tool that we're going to use as when we're trading the markets to help us measure the extreme highs and extreme lows when markets are going to be overbought or oversold, and to measure the strength of the trend. So you don't want to be the one buying into a bull market and be the last person to buy before the market turns and goes lower. So momentum indicators help us avoid these type of traps. So momentum is represented by a graphic form as a fluctuating line that is continuously oscillating from one extreme to the other. All momentum indicators oscillate. So again, what we're looking to do is measure the extreme highs and the extreme lows of price. So momentum equals velocity of price trend. How strong is the price trend? So momentum indicators, they're going to measure whether a rising trend is accelerating or decelerating, or whether prices are declining at a faster or a slower pace. So you have rising trends, falling trends. Think about a ball you throw in the air. It continues to rise. From the moment you release it from your hand, it's going to accelerate. It's going to keep pushing higher, but eventually gravity is going to take over, and it's going to force the ball from stop accelerating higher to slowing down, reversing, and then falling back towards Earth. So that's what. So using these momentum oscillators, these indicators, it will help us measure the strength of that velocity and give us early insights into if that velocity or if that momentum is starting to slow down, so that we can prepare ourselves as trader and take action. Where can we use momentum? We can use it on currencies, commodities, bonds, stocks, indices, precious metals, you name it. Anything that you can get data on, you could apply it to a chart, and then you could add and measure its momentum. So again, what we're looking to measure is the overbought and oversold conditions. Overbought could be an extreme to the upside, where maybe prices have gone too far, too fast, and that the market may be looking to correct or move a bit lower before going higher again, or oversold conditions where that markets were overly pessimistic and that investors sold it to a point where it's not justified, and that buyers would then be stepping in to look to take advantage of the oversold conditions. So all momentum oscillators, they move from one extreme to another. Markets are going to be driven by the psychological forces. It's our emotions that are going to be represented in the price of financial assets. And our emotions swing. We go from one extreme to another. We go from being very greedy to be very scared and be very fearful of the market, from hope to despair. And that's all going to be represented or shown in the prices. So here we can see this is I believe this is the S&P 500, and I think this is the recent sell-off because of the coronavirus. And you can see here, you can see it has fear has taken prices below. This is the RSI, and you can see the oversold area, and you can see how prices have reacted. So those that were following the RSI and they knew what to look for, they knew where to measure the oversold conditions, they were the traders that had an edge, they had the advantage, and they were able to identify and take advantage of those oversold conditions. The same can be said for overbought conditions as well. Very exciting stuff, very insightful, and these are tools that you could really apply to your day-to-day trading. So now let's add a momentum indicator to a chart on our MT4 platform, and let's show you how to do it. Okay, so once you pull up your MT4 platform, you can go to Insert. If you can see, you can click Insert up there, and then you go to Indicators, Oscillators. All of these indicators are oscillators. They all do the same thing. They're all measuring the momentum. So there are many here that we can go through, but let's pick up a most common one, which is the RSI. This is Relative Strength Index. In the period, you could measure the time frame that you're looking for in here. Okay, so let's set that to 14. Click OK. And that's going to put on the bottom part of your price chart. This is going to give you your oscillator, which today we're using as the RSI. And the RSI, it oscillates between overbought, which is around 70, and oversold, which is 30. So you could add from here, if you click this, and that will bring up lines which you could then place at, say, the 70 and 30 levels. And you could also click back and you can see how prices have reacted. So this is a 1 hour chart. So we can see here, going back to the middle of July, prices were oscillating. We're basically in a trading range. And then once they broke above, this is where we have seen to get a nice momentum trade in here. You can see that we broke above 70, and that's when price really took off with the momentum. Now what you can see here is that when price falls back below, this is where we get our warnings. This is where we're exiting positions, entering again above 70, selling below. So you can see that it's very easy to measure the strength of trend when you have the right tools. The MT4 platform gives you these tools. In here you have all of your indicators. You could add objects, your expert advisors, and your scripts. So the conclusion behind momentum oscillators are that momentum refers to the velocity or the strength of a trend. It can be used on any asset, and that momentum is a tool to measure the fear and greed of the market from extreme overbought to oversold levels.